And a very warm welcome to our esteemed guests, members, mentors, fellow bankers. So, as a premier club dedicated to bankers, actually, we are very thrilled to bring you this topic. The financial sector is the engine for achieving that ambitious vision that our government has of reaching a goal of US dollar 30 trillion developed economy by 2047. And this is an extraordinary journey that will see banking assets grow exponentially during this period. So, this rapid expansion, however, presents a new set of challenges and risks. And today we will explore the strategies required to manage this growth, from strengthening risk governance and leveraging technology to fostering collaboration and developing talent.
And what is the impact of those pillars when we translate them into action as far as financial intermediaries are concerned? So that's the next part as far as what will be its impact. So first is Viksit Bharat. Second is impact on the financial intermediation system that will dominate the banking field in the next 2 decades to come. And what should be the strategies? Banks are set to increase in the same proportion as far as the growth is concerned. There is a lot of opportunities. The front runners in the banking system can grab those opportunities to reshape their balance sheet and see that they are able to harvest. We should know as far as the SWOT analysis is concerned, we should also know about how we are placed. So a snapshot of banking sector, how it has evolved in the last more important is how we have grown in the last 5 years. Because 20 years ago, how we were, that is of importance as far as the assets and liabilities in the institutions are concerned, and how our obligations will increase from the non-core business segment. So we will try to look at how it is going to shape up, and then a greater partnership with NBFCs, fintech, and other intermediaries, and the risks that are going to be that we are going to encounter, and what are the strategies to support the means the pace at which the economy is going to grow. And we are already stable at 6.5%. We are very stable as far as the growth is concerned, and that is why IMF always says that we are one notch above as far as the investments are concerned, and they have done it after 18 years of gap. Means they have upgraded the, and accordingly all many of the banks rating has also been upgraded, so we can get funds at a cheaper cost. That means we should be developed economy, not developing economy as we are now classified as. And if that is to grow, then efficient financial intermediation is absolutely essential, and that's the reason why there will be a fundamental shift as far as the self-reliance of driving the country to a self-reliant state is concerned. So we are going to financial intermediation. Without financial intermediation, growth cannot happen. We have to fund various sectors of the economy, productive sectors of the economy. Of course, India continues to be a bank-led economy, and maybe in the next 20 years also, the position may not change much. Now they have to augment financial resources from somewhere. They will have to use the fintech. That is, it will finance capital investment, and working capital and non-fund based business we can provide to them. This is the pillar given in the Viksit Bharat. Now, what opportunities and challenges we will be having? Cyber security is a catalyst for growth, is not a compulsion on our head. So this has to be percolated down to the last man in the organization, so that governance and security can be strengthened, not only strengthened, but it has to be embedded in the organizational value systems in such a way that we will not compromise on cybersecurity, risk management, and compliance, and we will do the business along with them, because we have to survive. But it has given us an opportunity to harness the potentiality of alternate markets opportunity. So same way, this pressure on growth, which is now going to come to us, beyond going quantity-wise growth of the balance sheet, quality-wise growth of the balance sheet. And as their vision, and they should own it up, so that the sum total of all the contributions become the organizational goal. That's very important. One has to. Now, environmental sustainability. This is the fifth pillar of vision Viksit Bharat. Provide us a supplementary source of funds for us. Because unless we have funds, we can't upgrade our infrastructure. How you are going to increase your capacity to involve yourself in financing foreign trade and innovating methods to assist the corporates to gather funds from outside India? What we have discussed so far as the pillars of strategic vision of Viksit Bharat, economic growth and development is possible. And that requires ensuring efficient financial intermediation with risk proofing. That is what is the highlight of just some statistics as far as the size of our financial system is concerned. Financial system is having an asset size of 760 trillion. Now, means just now, March 25 data, 760 trillion. Out of that, banks have 415 trillion as far as the asset size is concerned. Now, if Viksit Bharat is taken into account, just imagine a State Bank of India with a 73 trillion and 1400 trillion. Humongous as far as the size of the operations is concerned. Bank of Baroda, 22 trillion. They are working very good. We are now the best banking system as far as the asset size is concerned, as far as the capital adequacy is concerned, and the asset quality is concerned. We are very good. Adoption of it has started from adoption of core banking. Now, I am just giving us our strengths. But what is needed is building core competency of the people to clean the balance sheets, and we have done it. Now, bad bank also has been introduced, that is NARCL, that is National Asset Reconstruction Company Limited. Now, these are all the reflections of our strengths. Approach to the recovery measures that we have taken, all those things we have done. We have done very good job as far as managing the asset quality is concerned, and brought it down to the knees, that is 2.5%. So in 2025, so this is the so banks are thus on a firm footing. We are on a firm footing. Financial Inclusion Index 67 in March 2024. We are dominating. We are opening more and more branches in urban areas and metro areas. But even then, as of March 24, the rural domination of bank branches are more. Semi-urban and rural, big rural areas. Because they should know that there is digital penetration as far as the banks are concerned. So if we do that, maybe the strategies will work better. How you are going to do that? That depends upon you. Because the assets and liability mix of every bank, assets and liability intricacies and risk intricacies of your bank or organization, NBFC or bank, that one has to keep in mind. That somebody is introducing this product, I will also introduce. Oh, okay, please introduce. But so if that is so, then I can align my strategy according to that, so that it remains different from others. Now, how we do that, I think we will have to sit together and work out, and maybe that we will have to set up an in-house research department with the technical peoples inducted directly from the markets, and see how best we can galvanize those resources. This is many fintech companies are giving lot of support to us, like in the form of loan collection agents, in terms of KYC agents, and a lot of things that are happening now. I think we should give them a good input about risk management, compliance, and because if they do that, then our quality of balance sheet will increase and our sustainability will increase, and customers will be very happy. The moment the proposal comes, you should be able to understand how it is impacting my balance sheet. Now, if you look back into the progress of Indradhanush reforms, recapitalization of banks. So this is the beauty of these reforms. I think people should take, now many of the banks have brought in lot of softwares. Like we earlier time we used to, when we were having standalone computerization, we used to know what is the deposit advances and all these things, and what is the asset size of our balance sheet on day-to-day basis, and exceptional reports we used to take. So similarly, now you can even know your own performance with the software that are now introduced by many banks. So there is nothing like speaking about it and getting the reward for that. That's a very good thing. So we have gone a long way as far as strengthening the banking systems are concerned. Now, what will be the major risks that are going to pose as far as Viksit Bharat is concerned? Credit and asset quality risk, and what is the implications of various kinds of government sponsored schemes and banks own products, and then corporate loans, and then MSMEs, and all these things are bringing a new set of liquidity and asset liability mismatch. It was there earlier also, it is there now also, but its complexity has increased, and that may cost you more. So that is the price of giving service to the customers. Digital. That is why now RBI is asking for a ESG and climate risk, strategic and compliance and governance risk, contagion and systemic risk. This is a very important where we are doing interconnected risks are very strong now, because we have to work with others. Instead of growing 20 times, we will degrow our balance sheet. But now you have so many inputs that are coming now as far as underwriting skills are concerned. Now you will take those items from the industry perspective and then try to strengthen your underwriting skills. Whenever we talk of risk management, credit risk management, we are not talking about 10 lakh loans. We are talking about medium, larger industries and corporate sector. There is no doubt about that. But as far as underwriting strategies are concerned, you have and factor the market intelligence inputs. Yeah, as far as strengthening underwriting skills is, one is the borrower information, and then take market intelligence reports. These three you amalgamate, then the quality of your underwriting will be much well aligned to the reality of the system. Then robust ALM frameworks. But you want to lend for 10 years. So how are you going to manage that? That is what is the ALM complexity now. And different kinds of bonds they are raising for long-term funds. Now, how we are going to do, I think we will have to rework on that. Own corporate strategy which works for the purpose of LCR management. But liquidity buffers, then duration hedging, interest rate derivatives, capital adequacy. These are all some of the things which requires establishing talent gaps, upgrading the talent skills, and then onboarding of newcomers who are coming into the system. All these things will have to work together. Any banking system world over has three big resources. They can have thousands in each one of them, but there are three big. One is organizational structure. That is how the infrastructure is built. Number of branches, ATMs, POS terminals, all. They are all buyable. Means you can buy them. The GDP will rise, the people's expectation will change, the customer profile will change, customers' demand will change, regulatory changes will come, regulators, you can't stop them from mending the ways. So all these things are given, means on which you have no control. So all these things will go on happening because it is for the good of the organizations. So you can't change the environment in which we are operating. Your ability to manage the people by mixing the component of technology enablers so that they are able to harness the potentiality of the infrastructure here and be able to operate in this business and economic and legal and regulatory environment. Human competency, that is why I say that Industry 5.0 requires investing in people. But does it serve the purpose unless it goes down to the implementation stage and gets transformed into business? I think that aspect has to be made more simpler, and that can come from governance scorecard. That is, so one has to, then you have to acclimatize to go for green financing. Okay, Rama. So climate risk, then exposure to NBFCs, shadow entities, strong model value validation, fair value governance, and independent oversight, and make them to check, means how you check them, how you are able to so governance scorecards you can develop, but we are not aligning them to the requirements of the three pillars that we have talked about: infrastructure, people, capacity, and external environment. And credit growth and capital mobilization, we have to align credit, risk weighted assets and capital, how you are going to manage. Then resilient governance and risk management, implement robust cyber security, fraud detection and compliance framework, strengthen risk management to manage rising. Now, one point I would like to make very clear here: activities which are the norms now, like KYC, then due diligence, then you have collection account, collection of loans, then even mobilization of business also. Some, I have seen some of the banks engaging in that. So the kind of, and now suppose you are giving them a business scope of 100 crores now, align your risk management systems to fall in line with that. And then to a large extent, you can risk proof your organization. I don't say 100%, but yes. So we will have to revisit the business processes that are bringing a product to the delivery point. Like a customer talking to a bank person is the last, because unless the system supports a robust banking tomorrow, a risk-proofed banking tomorrow. That's the only intention that we have, all those who are in the Elite Bankers Club. So please don't take it like that. But reskilling and upskilling, workforce transformation is the biggest strategy one should have. And the kind of lending that we do, the kind of investments where we make investments, that is non-SLR investments, are ESG compliant. So let us try to understand ESG from the perspective of how its shadow is reflected in our business composition. So balance sheet optimization by monitoring risk and capital. Have a track record of the balance sheet composition of the last 10 years. Now, suppose, just imagine, now balance sheet optimization can be done by CFO. That is good. But CFO will see the business that is there. But who is generating the business? The first line of defense. Without losing the control on the systems, all these things will require a lot of rejigging, collaboration, and ecosystem building. Collaboration is very, very, now we have to work in teams, form strategic alliances with fintech and NBFCs and co-lending schemes that we are having, serve the broader markets, and participate in open banking and embedded finance model. Embedded finance model, we are already doing it. Open banking for what we, RBI is already having a lot of additions. Regulatory complexity will increase, my dear friends, because it has to increase. So it has brought in a lot of new regulations. Now, what is happening in the banking system? Now, New India Cooperative Bank, what happened, will give you some kind of a reading. So the regulations are bound to be complex. New products to come into market, and they want that the customers should be served better. Governance has to be. So regulations are bound to go up. And these are all some of the recent changes. Banking system regulatory banking amendment law amendment act, where the nomination for your lockers and bank accounts, 4 people you can nominate, and because it is a measure to simplify. So the tenure of cooperative bank directors has been raised from 8 to 10. Like this, I am just giving some example of what I captured. Gold loan guidelines have been changed. Then non-funded based lending facilities directions have been changed in 2025. Then operational risk management guidance. So these guidelines consolidate and standardize the regulatory framework governing the non-fund based business. Now, like this, some changes will come. Please perceive that risk. I am just giving these examples only to sensitize that the operational risk is going to be much more when we are handling higher kind of growth. When the risk composition is higher, you should have technology, skills, along with that risks are. So my submission is think and prepare your systems. And in achieving your ambitions in life and a very good career path for all those who are currently working or those who are guiding those who are working very recently. And that gave me an opportunity to build my inputs on this subject. So thanks to Arvindji and thanks to all those.
Sir, your presentation, your expertise has provided us with a clear roadmap for navigating the complexities of the exponential growth in the Indian banking sector, which is going to happen, ranging from the imperative of strengthening underwriting and risk governance to the strategic importance of technology and talent management, and the projected 20-fold growth in banking assets by 2047 is indeed a monumental task. Just I wanted to add that recently RBI Deputy Governor had also touched this topic obliquely in his speech to at the 109th Foundation Day of Karur Vysya Bank. Progress, and I'll just give you the exact title, I don't have before me right now. Banking on Trust, Technology and Transformation for Viksit Bharat. Uh, Mentors who are present here, and especially to Shri Gupta ji, who is also here for their observations. So Gupta ji, can you just
For all curious bankers who are curious to learn. So I have given the links of those study materials.
In fact, what I say about the risk management, he is the authority on this aspect. So logical learning in the banking, what I found during my tenure as well as during these 17 years of my training period, that is my one point which I will like to stress upon here. So all those things, we should share our knowledge with them. And these things I applied in my various branches. We can learn so many things. And please remember one more thing about what he said about the ethics.
And we got to learn many things from that. Thanks for that, sir. My basic question is that that you have talked about 20x growth for Viksit Bharat for 2047. We need to develop new products, new processes, as we are going to deal with the new generation people who have they have expectation, they are totally digitized. So what five things that being a young generation banker we need to grow inside us, so that we can give better services, we can develop ourselves as a better banker in coming days, so that we can contribute to the growth of banks, which will lead towards the Viksit Bharat goal.
Very good. Very good question, and it is applicable to all the employees of the banks currently or who are going to be there. First and foremost is we must develop the love for data that gives us better intelligence inputs so that our decision quality improves. So first is love your data. We get into tension that, oh, chairman is asking or somebody big person is asking and I am not able to retrieve the data and all these things. So storage and retrieval. And fourth thing is it is very important to have interpersonal skills unless you capture. So prepare dash. This is the new age bankers is you capture the deviations as soon as possible. So you optimize the use of your technology, learn something new. There is nothing wrong. Recently, I was trying to learn. So these are the 5, whatever is driven from the experience that we have and from the readings that we make from the system. That is what I think. If Gupta ji would like to add on something, most welcome. I will learn more from you.
I think
So,
Mr. Sunil wants to add something.
Now, as Mr. Tiwari has, asked for certain clarification, I thought, आपके आगे मैं बोलूं तो अच्छा नहीं लगेगा because
नहीं, नहीं.
you've been,
ऐसी कोई बात नहीं
absolutely. So now 5 pointers as Mr. Tiwari has asked. So, I mean, I was just, mentally thinking, जो आपकी presentation थी, उसमें बहुत सारे pointers थे. So the only thing, which remains consistent and constant with the bankers is service and service with a smile. Second aspect is, we are expected to have lots of change now. We will not really be able to, go ahead and manage the expected change which is required. Third thing which is very necessary is to first unlearn and then learn new things, because everything is going to change. Now we must unlearn the old technology, techniques, methodologies, and then eventually, ride on to the bandwagon which is expected, which is going to be available with us. Because as Mr. Tiwari has himself said, is, be cyber resilient. Because since technology is going to take for or come to fore, so resilience is going to be a very effective point, which is expected to be handled by the organizations. And obviously, we are individual, constituents of an organization, so we must contribute and follow both. And we are trying to say that, those people are going to, really, you are going to manage the kind of, emotions well, or soothe, or have an, interpersonal relationship, as you've also pointed out. But now is going to be the time when you're going to have the machines.
So I said yesterday he was a branch manager with me, and he has become an IT. So he learned. That is what I was telling Mr. Tiwari, that we need to have the curiosity to learn.
हाँ, गुड आफ्टरनून सर. सर मेरा क्वेश्चन ये है कि सारे बैंक सर आजकल कासा के लिए स्ट्रगल कर रहे हैं. हम 2047 की उसकी बात कर रहे हैं, 30 ट्रिलियन की. तो इसमें सर बैंक का बैलेंस शीट बढ़ेगी, लेकिन जैसे इंटरेस्ट रेट कम हो रहे हैं, बैंक रेट हो या डिपॉजिट पे रेट कम हो रहे हैं, तो बैंक स्ट्रगल कर रहे हैं सर डिपॉजिट मोबिलाइजेशन में, और इससे लिंक करेगा हमारा एडवांस का भी.
तो हम लोग जब ये डेटा पॉइंट्स को देखते हैं, तो और आपका एसेट क्वालिटी 2.5 और 2.7 वॉट एवर इट इज बिलो 3%, और नेट एनपीए ऑलमोस्ट नहीं के बराबर है, क्योंकि आपका जो प्रोविजन कवरेज रेशियो बहुत हाई है. तो ये जो हम डेटा पॉइंट्स को देख रहे हैं, और इससे यदि हम कंपेयर करते रहे कि मेरा इससे ज्यादा होना चाहिए नेक्स्ट टाइम में, तो जो इकोसिस्टम जो बिल्ड हो रहा है, तो हर सेक्टर्स में थोड़ा थोड़ा एक्टिविटीज बढ़ेंगे, उसका एम्प्लॉयमेंट बढ़ेंगे, उसकी सैलरीज बढ़ेंगे, तो अगेन इट विल फ्लो बैक इनटू द सिस्टम. अभी फिर से आपका कासा थोड़ा सा बढ़ेगा. हालांकि कासा आपको इसकी एफर्ट्स, लेकिन जब आपका वॉल्यूम बढ़ेगा, जैसा अभी सोचिए कि 415 ट्रिलियन जो आपका एसेट साइज है, वो यदि 600 ट्रिलियन हो जाए तो उसके ऊपर कासा क्या होगा. तो मेरा कहने का ये मतलब है कि जो ये डेटा का जो इंटरप्रिटेशन हम कर रहे हैं, उससे हमें वरी नहीं होना चाहिए. जो अभी जैसे जीडीएस है, ग्रॉस डोमेस्टिक सेविंग्स, हाउस होल्ड्स का सेविंग्स,
या लोगों के जो रिक्वायरमेंट्स हैं वो बदल चुकी हैं या अभी भी बदल रही हैं, तो आपको थिन मार्जिन के ऊपर काम करना जरूरी होगा, आना चाहिए. और आपके एक्सपेंसेस को आपको कंट्रोल करना पड़ेगा, बिकॉज यू कांट रियली कीप ऑन एक्सपैंडिंग योर एक्सपेंसेस to a greater level.
Totality, what is this, how this is happening, what RBI wants, and how this जो नॉन SLR सिक्योरिटीज में अब जब रन ऑफ रेट बढ़ गया है तो हमारा इन्वेस्टमेंट ज्यादा रहना है, ये बेसिकली क्या होगा सर? सिंपल लैंग्वेज में आप बताएंगे तो अच्छा समझ में आएगा.
हम 110 मेंटेन करते हैं, 120, तो हमारा लिक्विडिटी फेल्योर का चांस बहुत ही कम है, ना के बराबर है, बिकॉज वी वांट टू बी वेरी वेरी सेफ. एंड व्हाई IL&FS बैंक हैज फेल्ड, उसका कोलेटरल डैमेज ये हुआ कि जो दीवान हाउसिंग फाइनेंस है वो कंपनी
हाँ।
बैंकरप्ट हो गया। मीन्स 100 रुपीज का सिक्योरिटी है तो 95 ही लेंगे वो।
आप उनके ओडी अकाउंट्स को बंद करिए, और ये फील्ड में हो भी रहा है। तो
हाँ।
अभी जब मैंने एलसीआर को पढ़ा तो ये तो डिजिटलाइजेशन का, इन सब का बात कर रहा है। फिर नॉन कॉलेबल डिपॉजिट जब लॉन्गर टेन्योर के लिए था, तो इसमें हमने कैसे एलसीआर को एड्रेस किया?
एंड लिक्विडिटी इज द प्रायोरिटी ऑफ द रेगुलेटेड एंटिटीज। तो इसके लिए उन लोग कोई भी रिस्क नहीं लेना चाहते हैं। हो सकता है वो कंपोजिशन चेंज हो जाए कि और 50-50 कर दे आरबीआई, क्योंकि जब वो देखेंगे वल्नरेबिलिटी ज्यादा है, लोग ज्यादा शिफ्ट कर रहे हैं अदर एवेन्यूज में, so they will change the composition of classifying the assets and liabilities into different time buckets. तो आरबीआई का इंटेंशन यही है कि हमेशा आप लिक्विड रहे, है कि नहीं, और उसकी क्वालिफाइंग जो सिक्योरिटीज हैं वो आपका कभी भी पैसा में मोनेटाइज कर सकें आप। सोचिए आपके पास बहुत से सिक्योरिटीज है लेकिन वो मोनेटाइज नहीं हो रहे हैं, तो आपको जब जरूरत पड़ेगी तो आपको पैसा हाथ में नहीं मिलेगा। तो दिस विल क्रिएट ए liquidity risk for the bank. That is why they want more strictness as far as, इसीलिए वो हेयर कट्स भी ज्यादा डालते हैं जिसका।
थैंक यू सर।
So, thank you all for your very active participation and for making this such a successful and insightful session. To our guests who joined for the first time or who are not our members, I sincerely hope you found it to be valuable. Thank
Sir,
you. Thank you so much.
before we conclude, my special thanks to Sunil
Yes,
sir
of
and
course.
Gupta sir, and of course you are the driver as far as the webinars are concerned, and thanks to you as well and to all the participants. Thank you very much.